For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. We're going to go through the different examples in the previous week of Market Maker templates, the 3-day cycles. So I received quite a few questions and emails that were regarding the video multi-session highs and lows and understanding the templates. And there was a bit of confusion from traders doing their day count and misunderstanding that some of the templates we went over were the only templates and that was how they do the count. And a higher high and a higher low is day one and different things like that. So we're going to come back to some really basic concepts. We're going to go through each pair. And we'll do this in shorter video increments so people can digest that and watch it in shorter spurts. And understand that just coming back to the simple understanding that Monday is our day one. And the easiest way to understand multi-session highs and lows is instead of just looking at a day as a separate entity from everything else, realizing that the session highs and lows coming into each day form our peak formations, and also then the high or the low of a previous week form the beginning of our 3-day cycle, which is separate from beginning the week and having a day one. So coming back to the simple concept, we talked about day one being, it can be down, up, whatever, day one. Day 2, day 3 is the basic template for a larger move. So one of the questions that came out of from a trader was, I don't understand the relevance of the day count. What does that have to do with what's happening? So coming back to just realizing that we have session trades, we can have a high of the day session trade in the US or London or Asia. We have, this could be a sell high setup in Asia. Or this could have been a sell high setup in London. But as we get through the week, we have a larger 3-day setup, which could be London, US, whatever. This could be a Thursday, it could be a Wednesday. This could be a Wednesday inside, and then Thursday takes out the high for a larger move. This larger move might be 50, 75, 150 if it's oil or gold or one of the indexes, or even larger. The larger move is where you can obviously have a substantial asymmetrical risk-reward opportunity. That's the larger move. That's the bigger trade for a 5-star. So people keep saying, is that a 3-star? Is that a 1-star? Is that a 5-star? When we get a setup that occurs over a 3-day cycle for a large move, that's 5-star, because I can position myself with the same amount of risk up here that I can on this trade, which might be 50 pips. 25, whatever, and I'm risking the same for that trade opportunity. But this opportunity, when it sets up over that larger 3-day cycle, offers me maybe 5 or 10 or even greater a gain on indexes, oil, sometimes even up to 20 to 1. We've had moves on oil and S&P that have gone 750 pips, $7.50, whatever you want to call it. So when you understand the templates, then the setups in each session make more sense. So sometimes you're going to have maybe a high of a week and a low of a week, and Monday's an inside bar. Maybe they've come down and it looks like a downtrend on the Friday, and Monday's an inside bar because they're flipping the book, which is when they're reversing the markets. And we get a day 2 that takes out Monday's high and a day 3 that trends back up towards the high of the week, which defies all the technical indicators that said the trend was down. So there's going to be different templates, and we'll look at just examples of that by reviewing each pair from the previous week. So if we take a look at the Canadian dollar, just having a big picture look before the week even starts, because I know there's people out there going, yeah, but I trade from the right side of the screen. let's take a look and see what we notice. We have a market that's gone vertical and then gone sideways. What that tells me right off the bat is that we are trapping volume down low. Let's just start with a basic concept like that. There's two scenarios. One is that it's a reversal, or one we're going to get a continuation, and this is the middle of a mid-move pause rectangle in the middle of a measured move. But when we start our week, the market breaks out into the London session. So for all the people who are trend traders, this is the day where the market has reversed. Day one down, day two, as soon as we take out a low and they come back inside the blue tracer, the previous day's low, that is one of the telltale signals to look for the reversal setup. So we talk about first green day, first red day, those types of scenarios. If we have first green day on the Friday, so first green day is a market that proceeds to make a peak formation first in a downward market and then closes above its open. First green day, peak formation first, and first red day is the opposite. Peak formation high, closing below the open. Now, it doesn't mean that the next day is automatically a trade. Sometimes we'll get three peaks down for a buy low of the day for a reversal. But in this particular case, we get the trend trade right into the Europe London Open back to the high of the week. So if this is our day one runner, which we've talked about, not counter-turning a day one runner, this market still gave a 25 pip reversal trade in the US session on the Monday. But coming back to the basic template, I'm looking for that market to break higher day one, day two, day three. We don't get that. It doesn't break higher. But what it does do is it gives a peak formation inside for a sell high setup in the Europe London window that only goes 25 pips. Only goes 25 pips before coming back up into that peak formation prior to the US session, giving us our M structure. This is a 15-minute chart for a sell high setup on day two in the third session of the day. 3 peaks into the high of the week for a 50 pip trade back through the low of the day, back from double zeros to 50. Day one. Now, if this is day one and we've gone up, I'm looking for a buy low because the market has not taken out the high. So instead of going higher, day one, day two, day three, the market has gone down. So now I'm looking for, we talked about this in the multi-session trading setup, this is my high of the day. Now I'm looking for the low of the day. They put a low in place and then trade back into that low of the day at the Europe Open on day three. So again, noticing I talked about the pump ups for shorts. This is the dump setup for the longs on day three. The buy low on day three. We didn't take out the high of day one, day two, day three. Now we're on day three with a buy low of the day to trade back to the high of the week. So now we're looking at day two longs on the break of the high of day two. Now, hopefully you grasped that understanding. On day two, we did not trigger the high of the day. We don't have breakout traders in the market. We have shorts in the market. So again, coming back to who's in the money, right? Who's in the money on a day one runner that was long that broke the high of the week. So what they've done, if you understand that, coming back, looking at the high of Thursday, Friday, they've got longs in the market. They've got longs in the market. Somebody's bought the break not only of the Friday's high, so they've got longs in the market on Friday. They've got longs on the market on day two. We'll just color that in. Longs on the market on day two on the breakout of that. And now these longs are underwater at the close of day two. So we had traders say this is first red day, but there's the first red day trap. Why? Because they came down to the low of the day and gave a buy low right at the open of the 12 candle window. So again, if you're trading the US Canadian, there's an example of a Europe London window, 12 candle window buy low setup back to the high of the week. Day three. So now we've got day three, we've got day two longs. Day two is the second day of breakout traders in the market. So we did on day one, we've got longs in from Friday's high as well as the previous week's high. And then on the Wednesday in the U.S. session, we've got, of this week, day 2 longs now triggered into the market. They come up to the high of the week. Again, another example of the U.S. CAD offering a sell high setup right at the high of the week, the day, and the session in the Europe London Open for a trade back down to the low of the week. Sorry, the low of the day from day 3. So again, we trigger breakouts first. Day 1, day 2, day 3. We're on day 4. They trigger breakouts. So we'll just scrunch this up. Longs are in the market. Longs are in the market up high. They go into those higher level longs, give a buy low scenario back to the high of the week, high of the day. They trigger longs on day 4. So as soon as those new breakout traders are in, beginning of the session, high of the day, high of the week, they short back down into higher level longs from the close of the U.S. session on day 3 before resuming the uptrend on the Friday. So we continued that move on the Friday. We have a rising trend line, micro trend line break. We have longs triggered in the market at the close of the U.S. session. We'll just color that in. On Friday, so we've got longs in the market on Friday where they could easily still come back into those higher level longs in the Europe London 12 candle window. They've come up into the high of the week inside of the week's high from Friday, currently trading inside with no breaks on day 1 of the new week, but we're up high. We close the week as a green week, a bull candle green week, as well as a green day. And the low of that U.S. session from Thursday is down 3 levels of drop. Now, I have no idea what this market's going to do. They could trigger breakouts and reverse, but we're up high on day 1 in the new week after 3 days of rise into the close of Friday. So the templates will change, but again, each template, if you understand where you're at in relation to the high and the low of the day and the week, multi-session, we have an example of a market coming down at the previous week and going vertical right at the beginning of the week, day 1. Day 2 comes down and puts a low in place, and then they start the count again. Day 1, day 2, day 3 to the high of the week. We close inside the peak formation at the close of Friday, and Asia has put a peak formation high in on day 1 of the new week. So we'll watch and see what happens. But we're up high, day 1, new week, after 3 days of rise. We'll see you in the next video. Keep it simple, traders.